Imagine receiving money into your bank account every month that covers your bills, car payments, and mortgage, maybe with even a little left to spare, all from the comfort of your couch. That's the power of dividend investing, if it's done right. And in this video, I'm going to show you how to earn $500, $1,000, $1,500 or more in monthly passive income by investing in dividend stocks. First, let's quickly define dividends. When a company makes profits, they have a few ways to spend that money, including reinvesting it in their business or using it to buy other companies. They can also choose to reward their current shareholders by paying out a percentage of their profits to them. That payout is called dividends. Companies can choose when they pay out their dividends. Some pay annually, while most reward their shareholders quarterly. There are, however, some companies that choose to pay their dividends monthly. And today, that's what we're going to be focusing on. Now, before we get into the list, you're probably going to notice of the 5 stocks we cover today, 4 of them are real estate investment trusts, or REITs for short. If you choose to further explore dividend-paying stocks, you'll find that many of the highest yielding companies fall into that category. Why? Well, REITs are offered special tax advantages if they manage to follow a specific set of rules. One of those rules is that they must distribute 90% of their taxable income back to their shareholders in the form of dividends. That's good news for you and me, and explains why they tend to have higher dividend yields than non-REITs. However, there's also a downside that you need to be aware of when investing in REITs. As you can imagine, a real estate investment trust is going to have a strong relationship with debt and therefore interest rates. Interest rates are currently rising and have been for the past 12 to 18 months, and this can put downward pressure on less efficient REITs. So when looking at the sector as a whole, you might find other trusts that offer higher yields, such as Orchid Island Capital that currently offers 19.4%, but dividend yields of that size tend to be more volatile and less reliable long term. So it's important to consider the history of the company and its stock, not just the dividend yield. So for this video, I've selected companies with high dividend yields that also have a strong track record. Of course, as a quick disclaimer, please remember that this video is not financial advice and it's for entertainment purposes only. So if you're already familiar with dividend stocks, the first company on our list will be no surprise, and that is Realty Income, stock ticker O. Realty Income is a large cap retail REIT that owns more than 11,000 properties. Established all the way back in 1969, they've been in business for over 50 years, and today their huge, primarily retail property portfolio is spread across more than 1,000 tenants and 70 different industries. Realty Income offers an awesome dividend yield of 5.1%. In comparison, the dividend yield for the S&P 500 currently only stands at 1.52%. Realty Income also has an impressive track record when it comes to their dividends, as since 1994, the retail REIT has raised its monthly dividend every year. Sure, the hikes aren't mind-blowing, but they're consistent. They have an uninterrupted dividend streak of 53 years, and their average dividend yield for the last 5 years is 4.35%. At their current yield, if you invested $10,000 with Realty Income, you could expect to receive $510 a year, which equates to $42.50 paid monthly. A $100,000 investment would pay you $425 a month, while a $200,000 investment could mean that you get $850 every single month in passive income. Now, it's worth noting that Realty Income stock is down almost 7% this year to date, which may be related to the rising interest rates that we mentioned earlier. Second on our list is the only company mentioned in this video that is not a REIT. That is Main Street Capital, stock ticker MAIN. Main Street Capital is an internally managed business development company, or BDC, and its origins can be traced back to the mid-1990s. It's one of the largest and oldest firms in its industry, and when it comes to dividends, they've treated their shareholders very, very well. Since it first began paying out in 2007, Main Street has maintained an unsullied record of never cutting their monthly dividend. This only becomes more impressive when you consider the fact that we've experienced not one, but 2 recessions during that time. Currently, their dividend yield stands at 6.6%, and their average for the past 5 years is 6.32%. This number should be extremely appealing if you're after that passive dividend cash. $10,000 invested in Main Street would pay you $55 a month, while a $100,000 investment would net to you $550 on a monthly basis. If you've got the cash to spare, then putting $200,000 into Main Street Capital would earn you $1,100 a month in dividends. That's $13,200 a year. At the time of recording this video, their stock is also up almost 13.5% this year to date, and with a 14-year uninterrupted dividend streak, Main Street could be considered one of the most promising dividend stocks available. Now let's move on from the only non-REIT stock on this list, and let's go to our third monthly dividend stock, and that is Agree Realty, stock ticker ADC. Agree Realty is the second retail REIT on our list, and with a market cap of over $6 billion, it's safe to say that they've had some success. Established in 1971, Agree leases primarily to national retailers with investment-grade credit ratings. They have a massive portfolio of over 1,500 freestanding single-tenant properties, and some of their largest tenants include well-known retail brands like Walmart and Dollar General. Impressively, not a single one of their corporate tenants makes up more than 8% of their revenue. As for dividends, Agree Realty is currently forking out an impressive 4.5%, and their average for the past 5 years has been 3.76%. That means if you invest $10,000, you can expect to receive $450 a year in monthly payments of about $38. If you put 100 grand into this REIT, you will then be taking home $900 a month in passive income, while $200,000 will give you a whopping $1,800 a month. Agree Realty stock is experiencing a bit of a slump, being down almost 10% this year to date. This is eerily similar to the situation of realty income, and again, most likely has something to do with the recent hikes in interest rates. The only REIT on our list that seems unaffected by interest rates is number 4, Stag Industrial, stock ticker Stag. Formed in 2003, Stag can boast more than 500 warehouses, distribution centers, and manufacturing buildings. With a market cap of over $6 billion, they rent their single-tenant properties to hundreds of tenants across 40 different industries. Many of their tenants operate in the e-commerce space, which reflects the rise of internet shopping in recent years. But this unfortunately makes Stag more risky, as their tenants operate in economy-sensitive markets like building products and containers. To counteract these factors, Stag has spread its portfolio across so many tenants that no one tenant exceeds 4% of their rent. They've also spread out geographically, ensuring that no one geographical market makes up too large a portion of their revenue. Since going public in 2011, they've increased their dividend yield year on year. Currently, Stag offers its investors a dividend yield of 4.1%, and their average over the past 5 years is 4.56%. A $10,000 investment into Stag would mean that you would take home $34 a month, while a $100,000 investment would net you just shy of $341 monthly. And if you put 200 grand into this industrial REIT, you'll be making about $8,200 a year in dividend income, which is $682 a month. At the time of recording this video, Stag Industrial stock is also up almost 12% this year to date. Now for the fifth and final stock on our list, we're reverting back to the good old classic, another retail REIT, introducing the Canadian investment trust RioCan. RioCan owns over 200 shopping centers and mixed-use properties, making it one of Canada's largest REITs. RioCan has managed to maintain a high occupancy and has paid uninterrupted dividends from 1994 to the year 2020. Unfortunately though, the pandemic meant a lot of retailers failed to pay rent, and the company was forced to cut their dividend payouts by 33%. Even so, currently their dividend yield is extremely competitive at 5.63%, which would pay you about $47 a month on a $10,000 investment. A $100,000 investment would mean you collect a nifty $470 a month, while $200,000 invested into RioCan means you could take home just over $1,000 in monthly dividend payments alone without lifting a finger. Their stock is down approximately 6% this year to date, and it remains to be seen how REITs will adjust to the prolonged hike in interest rates. All in all, those were our top 5 picks of the best dividend stocks for monthly passive income. When you get those first payments, it can be tempting to pocket the cash, but just remember, you can always reinvest it too. And if you'd like more tips on investing, be sure to watch this video next on some of the top investing mistakes to avoid from investing experts such as Warren Buffett.